Rob, what are you expecting on the Scotland vote today, and how do you think that's going to hit the markets?
Well, I'm expecting a no. The polls have, for a few days now, shown a consistent 3 or 4 point lead for the anti-independence camp. I think the precedent of Quebec here is also important. Once voters get to the polls, I think the chances are that more of them will turn to no rather than yes if they're undecided, because of the risk of what might happen after independence. After all, it's much easier to say to a pollster that you support independence than it is when it really, really matters in the polling booth. What will that mean? I think sterling will retrace some of its lost ground. I mean, of course, the big risk here is that they vote yes, and that, I think, would lead to a serious fall in sterling.
Okay, let's shift and focus on the other top topic that markets have been looking at this week. The Fed, yesterday it reaffirmed its commitment to keep interest rates near zero for a considerable time, but also implied it could hike rates faster than expected when it does start moving. Is this your house view?
Yes, it is. We're looking for the Fed to start hiking rates in April next year. I mean, the economy is moving along pretty quickly now. The ISM surveys are strong. It's been creating jobs for some time now, and unemployment has also been falling pretty quickly. So all of these things, I think, suggest that QE needs to stop soon, and indeed the Fed will stop it soon, and probably needs to start on this path of hiking rates early next year. Indeed, they raised their interest rate forecast for next year a little bit, and the year after as well, and I think that's roughly where we are too.
Okay, Rob, let's come back to Europe. The ECB set to announce the result of its first targeted lending programme today as part of its effort to stave off deflation in the euro area. Do you expect to see a strong uptake from the banks?
Well, we expect the TLTRO to actually be quite significant for the Eurozone economy. This could help increase lending over time, but I think beyond the TLTRO, the really, really important thing is the health check of banks, the comprehensive assessment that's currently going on at the minute. That's putting a lot of uncertainty into the outlook for lending, and I think the real key here is to complete that assessment for it to be credible, for any capital that needs raising to be raised, and then I think the Eurozone can look forward to probably some gradual increases in lending once that process is fully completed.